What's going on, everybody? Foxhound Finance back again with another AMC update. Please remember that I am not a financial advisor. Nothing in my videos is financial advice. All right, first things first, guys. I hope everyone had a great 4th of July yesterday. I am uploading this on Sunday around 4:30. Today, before we jump into the technical analysis portion for AMC, we're going to take a quick look here at the box office numbers for 2026 Q2. And right here, as you guys can see pulled up, we ended at $2.97 billion, which was right around the range that I was predicting, between that and $3 billion on the nose. And this is just from Box Office Mojo. We do not have the official results yet. We will see that in the August earnings report, right? So we'll see how that goes for the total box office revenue. And if you look at 2025, killed that by $300 million. And we have not had a $2.9 billion to $3 billion box office quarter, guys, since what, 2018, 2019. So still about 200-ish plus 250, $260 million off of 2019, and roughly 350 million off of 2018. But these were some of the best years for the box office for Q2. So that is saying a lot that obviously movies are in demand, theaters are in demand, and things are continuing to look up. So I'm really, really happy about that from the fundamental standpoint. So I wanted to share that with you guys, that we are in the right direction. Now let's jump over to the technical analysis portion here real quick. So anybody new, you guys can see my red lines here. These are resistance lines that I think that we have to break to start to see impulsive moves back up this cliff here that we fell off of during the ape conversion, reverse split, dilution, right? All hitting us here. This is the level here at 1377. I think is kind of our ceiling to break before you start to see that move. And until we get up here, guys, I don't see us hitting any of these crazy price targets that I'm hearing from people online, right? Some people are talking about $100 and $150 when we're still down here trading around $2. So I am not living in that moment right now just yet until I see us break this and start to see how the price action progresses, right? And in doing so, breaking the ceiling, I think you'd get up to the $19-$30 gap fill right here. And then after that, guys, I think you could get a surge right up to this gap fill here. That needs to be seen at $4, not $4, $43 roughly, right? If an open gap here up to about $43 would fill it. And then again, the top of this cliff was what, 55 bucks ish. So I'm really paying attention to that top part of the cliff because that is where this all originated. And I do think the chart got really messed up once that happened. So the origin of when that all took place is what I'm paying attention to. Anything after that, guys, we will monitor step by step, but we're not up here yet. We're way down here in the basement. All right. But that is our structure right there. That those are the resistances that we need to break. And obviously you can see some of them are descending. And the main ones that we needed to break was the 556 or origin point one right here, descended all the way down. We are trapped under that for a year. And then our 1188 resistance line, which again also broke that one. So at 93 cents, when this thing reversed up, you broke both of those descending resistance trend lines. And then I mapped out kind of like a slow scenario how I could see this playing out if we're not going to get a super jumpy type move all the way up to the top. And so far, this thing's been tracking my yellow line here, which is based off the previous volume levels and strength and resistances, right? So that is kind of a rough mapping out. It's not a one-to-one fit, obviously. It's not following it to a T, but I just kind of stretched this out just to see a more patient outlook rather than this like squeeze type of scenario that's being spread every day. And again, like I said, we're doing pretty good at tracking that, and we are holding my support line. And the biggest thing to note here is that your 1390 descending red resistance line here is meeting this ascending support line in January 2027. So a lot of people were kind of pissed off. They're like, this guy is saying that this isn't going to happen until January 2027. It's not what I'm saying. I'm telling you that the apex of this wedge, a big decision will be made if it's not made sooner, right? Like if it doesn't happen now that we break out of this red resistance line, then chances are if you see price bouncing inside of this wedge, that when it gets to this apex, it's going to be a massive move to the downside or a huge move to the upside, right? That's just what I'm seeing, right? So structure-wise, guys, that's everything mapped out. It looks very, very good so far. A couple things to look at here. was the first impulse up out of the all-time low at 93 cents. We were following the same wave up, wave down pattern, right? Everybody was freaking out right here. Even I thought myself, after seeing multiple wicks here, I said, all right, we're probably going to come down and do a double test of the breakout right here on this red resistance line, come down to it, test it, and then push off. We actually didn't even get to do that, right? We came back up, jumped right back on my ascending support line. 1, 2, 3, 4, 5, 6, 7 candles, all printing right here. And then we had the next impulse wave back up. And then just recently came off the 296. We'll call this a new, what I want to call it, higher high, right? Compared to this. So we went from $1.95, then we went to $2.96. And then obviously the dilution news came in, 95 million shares being offered, $200 million being raised. I'd hope it'd be more than $200. But yeah, $200 million being raised. And then I think saving $180 million on the 2027 notes that were going to be due going into next year. So all in all, yeah, frustrating. I understand people are emotional about it, but guys, this is really all part of it. Like when you see the news come out and then you look at the pattern playing out again, like the news to me doesn't really matter at this point because look what's going on right here in this area of the support. Very similar to this, right? After the first wave out, came down, rode the area of support, pushed up. We're now riding the area of support again. And if candles continue to print on this thing and continue to push up, obviously, guys, I'm looking for another move like this. All right. And what does that look like? What are the resistance targets, top end targets for July? Well, now we have our pivot points generated for the month of July right in front of us. So we have the upside targets and downside targets now here. And so far, we are starting off the month under the blue pivot line here for July, which obviously isn't a big deal because we have not had a full week of trading in July yet. I think we kind of got split up with last week. So I'm curious to see how this week goes. If we get a nice couple of days where we push up above the blue pivot point line here, get some candles to print above this, and if that's the case, we do print above this line here. You're most likely, like I said before, going to go after resistance target 1 at 268. And then obviously, if we keep doing what we have been doing the last couple months, which is rip right through all of the resistance targets, right? Then you'd go after resistance target 2 at $3.43, which already would put us at a new higher high, right? Compared to the last high, which was 296. And then the top end target at R3 for July would be around $3.90 round up. Okay. Now, the thing is with that is we have gone beyond R3 every time we have gone on this run, right? You see it here and then you see it here. Last month in June, we went way past R3. So if we are to go past R3, guys, then yeah, you could be looking at potentially $4 plus, because when I go over to the volume profile, fixed range, let's look at my fixed range first before I go to the updated indicator. So right here, this biggest volume bar right here in the middle and this dotted blue line, look at where we're at before we broke down. I told you guys that we'd come up to 277, and if price was not able to print candles above it, you're going to come down. And then obviously that is what happened. We had a lot of upward momentum here. And then if I pop on the RSI, you guys can see we were overbought in this zone already. So I saw this cooling off probably before a lot of people did, even before the dilution news, because RSI was super overheated. All right. So looking at that, why is this important? Well, I said if we break down from this, it's fine. I mean, it's a massive bar here. It's the biggest bar out of this entire range. So if we came up to it, fine. We got a first crack at it. We come back down, cool off. Again, we are even sitting at a new higher low. So when we impulse off this, I do expect us to break this because, again, look at how your pivot points line up for July. We're over here now. So already R1 is going to be sitting right next to that big volume bar. And then getting to R2 and holding above it, guys, already puts you right here and into the $340, $350 range. And why that's important is because when you look at where, let's just do it like this. So look at R1, then we have R2 right here, just to give you a better idea. Make these a little bit thicker. Do this right here. Okay. Now we can turn these guys off. So looking at it from this perspective, these are roughly your targets, your pivot points, right, for the month. And then when you line this up to the fixed range for the volume, look at where your R3 target is. It's right here, smack dab in the middle of this very weak range. So I would expect that we would continue to surge past that and get at least up to this area right here, right around, what is this, $4.62. So I would imagine, guys, we could get up to this, and I'll just make it purple. So right around here, I think would be your next resistance to run into, because I do not see the price action reversing in this very weak pocket. It doesn't really make sense to me. So R3 being right here, I could see us having price action once again, surge past it, get all the way up to around 460, and then you will probably come back down and then cool off again. All right. So that's kind of the direction I'm looking at for the resistances for the month of July. If I pull those back open again, we can get a look at the downside targets, which I am not anticipating this will play out, but it's just something to pay attention to. But already to the left side here, you guys can see pretty much this could be the first shoulder of a head and shoulders move, and this could be your head right here. So if we do break my support and come down to S1 range and then reverse around this level here, what is this, $1.20-ish range, $1.20, $1.25. So if we see the price action come down here and then it reverses back off and then it gets up to around $1.95 again and then starts to stall out and break down, we could be looking at a head and shoulders pattern on this, which would probably lead to a double bottom at 93 cents. I know it's not popular to say that, but I'm just putting it on the table so nobody's freaking out. And I'm not like 100% bought into that because I don't even know what the hell that would mean. There'd have to be something, again, catastrophic happening with the market. And if they just put out a 95 million share offering, I don't see why they would need to do that, especially going into August earnings. It just doesn't make sense to me. So believe me, I'm on the bullish side of this thing, but I try to look at things objectively on this channel because I don't want to get too excited and think that we're in the clear. And then we get surprised by some head and shoulders bullshit move, and then we're down to 93 cents. So even if that happens, is this all over? Is it a big deal? Not really, because what could happen is you come down to 93 cents, you could have those massive impulse moves back up to what you just carved out over here already. So it would take probably, a couple days, I could imagine, to have us just shoot right back up to the top of this if enough good news comes in. You know what I mean? So nothing really to be concerned about in the present moment as we are riding this support pretty cleanly right now. Multiple wicks right around this range. And again, if we get the price action to go above the blue pivot line here, guys, past R1, pretty much invalidates that entire head and shoulders move, in my opinion. But I'll continue to monitor that as this thing starts to develop this week. All right. So that is the pivot points. Looking at your EMAs, we might as well throw this up. EMAs are looking really good, even though the 9-day is curling down. You have to understand that there was a massive gap down because of that news, quote unquote, that broke with the share offering. But to be honest, guys, these are all in close proximity of each other that I could easily see this reversing right off the support line here within a couple days. I would not be surprised. Um, with that being said, also, I said I wanted to see the 200 here, which is in yellow, become support. It's not there yet. But the nice thing is, guys, is that we did not lose all of our EMAs as supports, right? Even down here, you guys could see this. So we had the breakout from 93 cents all the way up. And when price fell, we fell under all of our EMA bands here, right? You could see that happening here. So that was also why I was like, all right, maybe we are going to come down and do the retest here because we're under all of our EMA bands. Somehow, some way, we jotted right back up this thing, got ahead of all of them, and then went on that run, like I said. So now with the pullback, you are sitting on your 48 EMA, and then you actually bounced back here on June 25th off of the 100 EMA. So that is a really, really good sign of strength, in my opinion, especially if this continues to bounce off of these EMAs, guys. We have not had that happen in God knows how long. I'm not even going to try to go back and try to find the last time we actually bounced off our EMAs at support. But that is looking really, really good on the EMA front. All right. Everything's in close proximity. Your 200 is also only at sub $2, $1.98. It could take a day, to get right back above the 200. So it's still in range. It's not like it's light years away or anything like that. So no cause for concern for me right there. Looking at the MACD on the daily, obviously, again, with that kind of gap down pressure, you're going to cross down on the daily for MACD, so no big surprise there. And also, too, like I said, RSI had to cool off. RSI is sitting now at sub 50, looking really good for another push up. So we want to get more gas back in that tank, let this thing cool off. And as long as we're creating those higher lows, it doesn't really matter, guys, because when we get the next push back up, more than likely you're going to create a higher high. And that's all we want to keep seeing is this thing progress upward. So MACD on the daily, not so sexy, doesn't look good, but on the weekly, still pushing bullish, even though if it's kind of fading right here, has not crossed down yet. And then even on the quarterly, which I found interesting, this already is crossing over. I did not think we were going to get the candle truly until like the end of September. So don't know why. It's much different than how the MACD looks on the daily and the weekly, but this is already crossing over with a sliver of bullish momentum here. So the crossover is technically in, although very weak bullish pressure right here coming in. It's not like a giant candle like we had in January 2021 and June 2021, but still the crossover is happening right now, guys. This is pretty much it with the bear case being dead at this point, and you can see that here fading out over time, as I said in previous videos. So really cool to see that little sliver of green come in. And what's even more important, I also said this in prior videos, is that this is much more realistic than what was going on during the COVID pandemic, right? A lot of money being thrown around the market, a lot of irrational buying, a lot of stocks at valuations that just never made sense to begin with. And obviously the company wasn't doing well because you didn't have people going to the theaters. So this was all really superficial price action to begin with. And then here you see that the bear case was dying, right? Slowly over time. And now, fundamentally speaking, AMC is in a much better position. The box office looks like it has completely did a 180 now. So looking really good on the quarterly. We'll continue to monitor that to see how this thing unfolds going forward. So really liking that with the MACD. And then what else we got? The updated volume profile. So I wanted to show this real quick because it just lines up really well with where you're going to see this potentially pull back to and where the resistances are and strengths are. So right here, point of control in this dotted white line sitting around what, $1.57, $1.58. That is your largest bar. So in reality, price action, if it does break my support, guys, you could get the bounce right here on these 2 to 3 bars. So anywhere is between $1.50 to $1.60. You could see price action come back down to that real quick and then reverse off the point of control and then go on that run, like I said. So I won't be surprised. I'll be watching this whole range really in here because this is what sticks out the most. But obviously, if we break below the point of control and candles start to print below these, it works the same way to the downside. You can see how the bars start shortening down here. And that would probably mean we're going down to do a double bottom, all right, at 93 cents potentially. But really, this looks good in terms of how it lines up with my fixed range over here, okay? So with this whole giant range over the last year and a half plus, even as we go up, guys, we are above the most tough resistance right here, even with the pullback. So we bounce off this thing, guys, and then look, you have nothing really up here stopping you, right? I think you could zip right up through this entire range on the left-hand side here. So that looks really good. Volume profile from the fixed range standpoint and just regular indicator up to date looks amazing. So that is really it, guys. I don't have much else to share with you today. If you guys have any questions, drop a comment down below for me, and I do a good job, I think, of getting back to most of the comments. I don't really try to respond to a lot of the irrational stuff because I think it's just a waste of energy at this point. If you guys can't see some of the patterns playing out in front of you, then I don't know what to tell you. But guys, we're looking really, really good. Box office numbers for Q2. Really excited about that too. And then Q3 looking even better potentially, right? We got a lot of good movies coming out for quarter 3. So I'll keep you guys up to date if I see anything massive change. But in the meantime, guys, just relax, try to have a good time, and let's just enjoy this process unfolding because so far we are continuing to track this thing, I think, really, really well. I'll catch you guys in the next video. Everybody, take care.